Good day, guys, and welcome once again to Financial Accounting Reporting ECC 111. And I am your course coordinator, Jovic G. Kain po. And we are now in the next ULO, which is ULOB for week 1 to 3. So describe and define the fundamental business model, different forms and activities of business organization, the purpose, phases, and branches of accounting, and the career opportunities of accountants in the industry. So let's start with the first one, the business model. So this is an example of business model as shown in your module. So shareholders will contribute capital maybe in the form of cash. And then the cash use will then be used to buy or acquire fixed assets or even in payment for staffs and utilities. So those fixed assets will then be used to create another asset or to create products or even use in rendering the service. Staff payment for staff and utilities are costs related to the creation of products and rendering of services. And the products and services will then be used to be sold to customers in a form of revenue, and the customers will then pay cash for the services they have received or even goods they have received. And then the cash will then return to bank for safety and security. So this is an example of fundamental business model. So forms of business organization. So the first one is sole proprietorship. Then this business organization has a single owner called the proprietor, who generally is also the manager. So one owner, and the owner is the only one who manages the business enterprises. Then the second one is partnership. Partnership, a business owned and operated by two or more persons who binds themselves to contribute money, property, or industry to a common fund with the intention of dividing profits among themselves. So the partnership are created by two or more persons, and they are called partners who will then contribute. It may be money, it may be non-cash item, properties, fixed assets, equipment, or even their services as a common fund, and the profits will then be divided among themselves. The next one is corporation. Corporation is a business owned by its stockholders or shareholders. It is an artificial being, so it has a separate personality created by operation of law or the Corporation Code of the Philippines, having the right of succession, so it can be transferred from next generation to next generation, and the powers, attributes, and properties expressly authorized by law or incidents to its existence. The next one is the purpose of business organization. So the first one is service. If it's a service, these are companies perform services for fee. So you are rendering your skills, your talents for a fee. Merchandising is a company or companies purchase goods or finished goods that are ready for sale and then sell those goods to customers. Manufacturing. So manufacturing companies buy raw materials and then converted them into finished product and sell the products to other companies or to final consumers. So these are all the purpose of this organization. Again, it may be service, merchandising, or manufacturing. The next one is micro, small, and business enterprises. So, on May 23, 2008, the RA 9501 was signed into law by President Arroyo, and this law seeks to address problems facing MSME, particularly the lack of capital and access of credit. So, under the law, banks and lending institutions are now required to allocate at least 10% of their loan portfolio to MSMEs, broken down as follows. So 8% to micro and small enterprises, and the remaining 2% will then be to medium enterprises. The old law provided only for a total of 8%. The next question now is that how would you classify micro, small, and medium enterprises, or what is the characteristics to be considered or the requirement to be considered as micro, small, or even medium enterprises? The first one, if you say micro enterprises, those are assets or those businesses with assets before financing of 3 million or less and employ not more than 9 workers. So if it is more than 3 million but not more than 15 million, or small enterprises are those with assets before financing above 3 million to 15 million and employ 10 to 99 workers. And the next one, medium enterprises have assets before financing of above 15 million to 100 million and employ 100 to 199 workers. So to be considered as micro, you do have less than 3 million or less assets, and not more than 9 workers. Small, above 3 million to 15 million, and employ 10 to 99 workers. Medium enterprises, 15 million or 100 to 100 million, and employ 100 to 199 workers. And more than 100 million is considered as large enterprises. Activities in business organization. So it may be financing. So if we say financing activities, these are required financial resources to obtain other resources used to produce products or services. So financing activities, primary sources of financing are from owners and creditors. If we say owners, contributions from owners, and if we say creditors, these are debts or loan coming from banks or other financial institutions. Investing activities, so those financings or finances acquired from owners or creditors will then be used to finance or acquire other resources used in the formation or transformation process of the equipments, goods, and even will be used for services. Operating activities so involves the use of resources to design, produce, and distribute the market goods and services. So these are related or activities related to the day-to-day operation of the business. So from purchasing to design to produce or even the distribution of those goods and services. So again, activities in business organization, it may be financing, investing, or operating activities. The accounting equation, accounting function I mean. So by definition, accounting is an art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part of what is financial character and interpreting the results thereof. So those words in red, these are considered as the phases of accounting. Phases of accounting. From recording of business transaction to grouping them into similar accounts and preparation of financial statements or summarization and interpreting those financial statements made by the company. It is the information system that measures, processes, communicates financial information about identifiable economic entity. So phases of accounting, so it must be recorded and the recorded amount can be measured in terms of financial character. So, to be useful in making decision, the recorded data must be classified or grouped and then summarized into accounting reports. So after going through the preceding phases, it is imperative that the results of the summarization phase may be or be interpreted and analyzed to evaluate the liquidity, profitability, and solvency of the business organization. So after it has been recorded, in which the recorded can be measured or quantifiable or accountable, it must be grouped into similar transactions and summarizes into reports. And then those reports will then be interpreted and analyzed that is useful in making economic decisions. Pacioli's double entry bookkeeping. So if we say double entry accounting system, states that for every debit there should give, there exists a debit habire should have or should receive. So debit means this is the value you have received, and credit is the value you give. So it is a give and take relationship. Pacioli's double entry bookkeeping, Pacioli's introduced three books kept by businesses. The first one is memorandum. So the book where all transactions are recorded chronologically, and journal is a merchant's private book. And the last one is the ledger, which is the list or alphabetical listing of the business accounts along with the running balance of each account. So by then, owners and managers needs information for them to give decisions. So the first one is that financial accounting are concerned with supply of information to owners of the entity, while management accounting, which is concerned with supply of information to the managers of the entity in deciding or in giving economic decisions. Career opportunities. The accountant may engage in the following areas of competence, or the CPAs may engage in the following areas of competence. It may be public practice, commerce and industry, government, education, or academia. So if you say public practice, it's the opportunity that a CPA can practice accountancy individually or as a member of public accounting firm. So this is the most common opportunities of CPA in which they are rendering their skills in public practice as an employee or even partners of different accounting firms. Commerce and industry. So, an opportunity that CPA can be an employee of a company that the position requires the person is a professional accountant. So these are CPAs in private accounting. Government services are opportunities of a CPA as an employee of a government where the position should be handled by CPA based on Civil Service Commission policy and regulation. So government related to LGUs, provinces, and even national government agencies. Educational academy like us are opportunity of CPA that will use their skills, abilities, talents, and knowledge in molding the future CPAs in the colleges and universities. So these four are the career opportunities of CPAs or accountant. Okay, it may be public practice, commerce and industry for private, government, service, or education or academy. Branches of accounting. So you do have here the different branches of accounting. So it may be auditing, bookkeeping, cost bookkeeping, costing, cost accounting, financial accounting, management accounting, taxation, and government accounting. The first one is auditing. So it is an external, take note of the word external audit examination that ensures that fairness of and reliability of reports the management submits to users outside business entity. So the information presented by the management in a form of financial statement, it will then be examined or verified by an audit expert to measure or to ascertain the reliability of those reports for the decision makers to give right decisions. Bookkeeping is a mechanical task of involving collecting of basic financial data from recording, classifying, and summarizing of those reports. Cost bookkeeping, costing, cost accounting, these are all related to recording of cost data in books of accounts. Financial accounting focus on recording transactions and periodic preparation of reports, particularly financial statements. While financial management is responsible for setting financial objectives, making plans, obtaining finance, safeguarding the financial resources of the entity, or even budgeting, these are all part of financial management. Management accounting, it was discussed before that management accounting focuses on the information to be provided to managers of the entity. So it incorporates all type of financial and non-financial information from wide range of sources. Taxation. So taxation is the preparation of tax returns and the consideration of tax consequences of proposed business transaction or alternative courses of action. So this is actually a separate standard which govern under the Philippine tax code or even the train law. Tax is the bloodline of government, and the preparation of tax and the regulation of tax rest with the Bureau of Internal Revenue. Government accounting. So concerned with identification of sources and uses of resources consisted with the provincial of city, municipal, provincial, or even national laws. And that's it for the ULOB discussion. So if you do have questions, feel free to ask uh, PM me or even in our group chats. Thank you very much. Goodbye and God bless.